Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. All right, you know that our last trade 37, was not that great. We actually exited on this day, even though it looks like it happened on the next day. But we got out at this level. The good news is the following day, the market did drop. So, generally speaking, if we're exiting at a higher price and entering back in a lower price, that's generally going to be better off than a buy and hold. So that's exactly what happened here. We actually entered in the position at the end of the next day, right about this level. You can see that by the yellow bar. I'm actually in a long position here. I was not able to capture the trade live, but we went ahead and entered in on this day here. And you can see that on the following day, we're already starting to take on more losses. You remember our prior trade, we did take some losses down around here, but we avoided some losses for this particular candle, but we are now taking on some more losses. So we're definitely in a downward market. Let's see how this trade turns out. All right, the next set of days aren't any better. As you might remember, we went in after a down day in the market here, and you can see that we're actually holding a position here marked in yellow. And for the next day, it's not doing any better. The market did drop again. The market has generally been falling for quite some time if you look at a little bit of a trend, and it is still doing that. So 2 days later, still down. It reminds me like we're walking into this rolling hills down into a canyon. This happens to be the Petrified National Forest. But hopefully, we see some sort of rebound. Finally, after about 4 days or so, the market gaps up and we finally see our first green candle. And at this point, Adam is going to make the executive decision. Even though we're taking a loss, it's not as great as a loss as it was last time. We are going to go ahead and take an exit from this trade. And let's watch that happen live. You can see this order going in. I'm actually going to speed it up a little bit because it took quite a while to fill. But trade 38 is over. I think we're going to have some interesting things to talk about on a result sheet. So let's take a look at that next. All right, that trade completed on October 30th. And according to Yahoo, the S&P closed at 415.61. So between the two trades, the S&P fell a little over 2% on that trade, bringing its year-to-date performance. We're now below 10% at 9.49. So here's something kind of interesting, though. Because we were not in the market while the S&P continued to fall, and even though we're trading a derivative, a 2 times derivative, our losses are actually less than the S&P 500. So we took a loss of 1.34. That brings our year-to-date total down to 21.72%. I do want to call this out because I find it interesting that, buy and hold, we would have been down 2%. If we were buying and holding using a derivative instrument like SSO, we'd have been down 4%. Because we're making some strategic exits and entries, we're actually taking a smaller loss. Now, I will call out the time before that, we took a greater loss. So these do tend to balance out a little bit, but generally we don't take as much loss as the S&P 500 buy and hold strategies, and that is why we're leveraging a derivative, and that is what we're comparing against, our trading strategy against a buy and hold on the S&P 500. So looking at the charts, again, we've fallen below 10% on a year to date. We've got roughly 2 months left to go. This is sort of an average return for the S&P 500. It's not a great return, but it is kind of average. I would have expected a little more after the bad year we had last year, but we're still holding at around 21.72%. We're now definitely outpacing the S&P. I do want to call out that during the same time on our trading strategy of SPY, which is not a buy and hold strategy. It's us trading SPY using some of the same strategies we do on the doubles. We actually did not trade during that time. The S&P fell, S&P 500 buy and hold strategies fell 2%. So now both of our strategies are outpacing it. But again, our game is this bright green bar. It is our trading strategy against the S&P buy and hold strategy. You can see where the numbers are. And that's where we are as of the end of October 30th. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.